Hi everyone, Nick here, looking at pot stocks. I'm not an expert in pot stocks, but I do have some important information on the charts. I do have a general idea. I know one thing, people love it, and on Main Street, it's still as popular as ever. On Wall Street, exact opposite situation. So this is a one-year chart of ACB, Aurora Cannabis. And they reported earnings last night. They're getting pummeled this morning, 10, 11%. This is on top of the drubbing they took all year long. It was stuck in a base, and then once the base is lost, Canopy reported 2 days ago, and it got hammered. So sympathy move, and now its own move versus the other one where it had its own move yesterday, sympathy move today. I think it was down big time, 12-15% yesterday, and then another 2 or 3% earlier today. So I do have information. Forget the thesis. There is information from the chart. As far as the thesis is concerned, yes, the applications are tremendous, but the companies can't make it work. I think legalization is not going to continue flying, meaning states are not going to be running to legalize it because they haven't seen, the ones that did haven't seen the tax revenues like they thought they would. It's still easier or cheaper, so I hear, to trade pot or cannabis illegally or without the proper licenses. So anyway, so both bulls and bears make good points. The bulls have plenty of reasons, and most of them are valid. The bears, the critics, I should say, have plenty of reason, and most of them are valid. To me, it's just a matter of perception and time. These companies are trekkers. I mean, they're trying to make work an industry that didn't exist legally. In fact, it still doesn't exist legally. It's still illegal in the United States on the federal level. So it's hard. They're facing tremendous headwinds, but maybe they can do it. CBD infused crap is all over the place. Just go to any venue that has to do with health. You'll see creams and topicals or whatever and edibles and claiming all kinds of, whoa, alert on Roku. All kinds of stuff. So it is there. Curious. Ooh, okay. So the point is, use the chart for some guidance. And I'll tell you what, this could be a buying bottom for two reasons. And okay, so this is a daily chart. Doesn't tell us anything. We're going to have to go to a weekly chart. This is ACB. So this has information for me. Watch this. So I'm going to mark it up. And you won't be able to tell the difference between this stock as far as level and discussion and Canopy growth, CGC. So is this level significant? Yes, it is. Look at where it is right now in the candle in the day. It's an open market right now. Look at this. These are not coincidences. This is 2016. Whatever happened there, the peak of interest, I don't know. And then it fell for a whole year, and then they broke out from here. These two are the most important two lines I have. And look at this. These are not coincidences. So this could be, I mean, a pivot point this big is, and this long, it took a year to break through and then never revisit again until now, is pretty important. So they usually provide some support. However, it's not a hard line in the sand. We're talking weekly candles, and we're talking a long time. And we see this one here. So this zone right here should be support on paper. Easy to say, right? So if I want to bet long on it, I would have to be diligent with putting stops. Now, you could use the options markets, but it's $3 stock. So if somebody wants to bet on it, it's probably easier to go with the stock itself because then time is not a factor. Then I can make decisions, but I should have stops. And, you know, those differ from person to person. Maybe I want to see it until it hits that line. Okay, so this is the statement on ACB. Again, this could be any chart. I don't care about the fundamentals at this point. So 2.56, let's call it 2.5, is another neckline. And so if I wanted 50-cent risk, I can do that from where it is now to then. Okay, so this is ACB. Let's go to CGC. Looks almost identical. You get the poke in 2016, the breakout in 2017, a year exactly later, and we are almost exactly at the same place here. So the the neckline for this breakout is probably arguably closer to 10.5, maybe 11. Depends on what you want to consider the break line. How about the retest of that candle right there, 12.5? That could be a stop. It all depends on personal preference. 13 and change could be a stop, but fundamentally, nothing has changed. They've got tremendous, and this company doesn't even have a CEO. So, but they look the same. ACB and CGC, you know, they poked, they struggled, they broke out in a big way, and they're struggling now coming back into the breakout zone. Those are my comments. So if I haven't gotten out of it throughout all of this, and I'm still in it, I'm debating, I would probably hold out another candle. Now, the other scary part is that markets are at all-time highs. So if markets trip, are these guys going to be able to find footing while markets are falling? So you have to consider that too. So this is an honest opinion on these companies. I have no dog in this fight, so to speak. I don't have any trades on them. I did trade them a few times with short-term options, mostly successful. So, but I haven't done it. And if somebody's looking for some input, this is an unbiased opinion on chart itself. I mean, it could be anything, any company. So they're falling, yes. Off a cliff, yes. There's no short-term support to be seen, so you have to look at the long-term, and we did on the weekly basis. They're falling into some significant necklines, and those are usually not butter. So whatever consolidation happened here is going to provide some sort of a floor. Could they go back to zero or their initial IPOs? They could. I don't know enough about them. I'm not sure that Wall Street is ready to kill the whole thesis and say, okay, they're out of business. But, you know, there's going to be fewer survivors. All right, Nick signing out.